Hello, I'm Ian Watson. I'm the head of the risk group here at Celent Research. And today we're going to talk about the winner of Celent's 2026 Model Risk Manager Award for Operational Resilience, Zenus Bank. In order to give international financial institutions access to the U.S. banking infrastructure, Zenus pivoted from being a direct-to-consumer digital bank to an embedded finance infrastructure provider. It worked with NICE Actimize to design a banking platform that had an architecture that embeds KYC, transaction monitoring, fraud detections, and sanction screening into a single control environment. The platform now supports more than 650 financial institutions across 180 countries and a total payment volume that surpassed 1 billion per month within the first full year of launch. We gave Zenus this award because it made its risk infrastructure a source of differentiation in a complex cross-border market. Zenus did not treat compliance as a brake on growth. It made compliance the operating system for growth. So join me now for an interview with Gabrielle Vieira, who is the Chief Compliance Officer at Zenus. Today, I'm interviewing Gabrielle Vieira, who is Chief Compliance Officer of Zenus Bank. Welcome, Gabrielle, and let me first congratulate you on the award.
Thank you. Thank you so much for the opportunity and the award, Ian.
Yeah, great. Well, it was a very interesting initiative, and I'm really glad we could, first of all, give you all the award for it, but two, also write it up. For those who are listening, there is a really interesting deep case study on the work that Zenus did. And, but we're using today to go beyond that material and talk about some of the things that weren't in the case study. So, Gabriel, maybe we should just start with the change in the business that set this whole initiative in motion. Zenus moved from being a direct-to-consumer bank to a business to consumer embedded banking platform that now serves hundreds of financial institutions globally. So what was the problem in the market that made this pivot necessary?
So there wasn't really a problem in the market or necessarily was a pivot. It always was our initial plan, part of our plan to move from consumer to B2B2C. The thing is that we needed to understand if what we were building worked to be able to manage the risk that, you're exposed to banking a global community. You have countries where they are perceived as high risk that were underserved where we were targeting. So we wanted to understand how to monitor this from a fraud perspective and how to be compliant from an AML perspective. So we designed it through the consumer product. We did our analysis on the data, the information that we were collecting, and the actual monitoring and the success of the compliance within that consumer's product. Last year, we understood that we were ready and that we are able to collect this information from other financial institution and embedding our accounts. So that was our actual move to pivoting to a B2B2C model.
Yeah.
Other things that we were considering was, different languages, different regulations, and having a financial institution between us,
Mm.
helps with those concerns and language barriers, which it's been a good partnership to have with fintechs in different jurisdictions that can actually manage that market, with this USD embedded account within their platforms.
Oh, great.
Mhm.
Thank you very much. So
Mhm.
let's move on to talking about the project itself.
Mhm.
One of the most distinctive things I see about this project is a little bit what you just talked about, is that the compliance was embedded directly into the onboarding and transaction processing.
Mhm.
So what did you do to have to make that work at scale so it really didn't slow down the business?
Yeah, so to make it work at scale, we had to build in-house, multiple orchestration layers that helped us, integrate with the fintechs or other financial institutions. And that was a big project, a lot of tagging going on, a lot of identification of different endpoints that we needed for, the KYC and KYB part of the process. So what we built in the consumer product, we designed it for our orchestration layer and collected from all these fintechs and all the financial institutions. That helps us to collect the information, to open these accounts, and to actually monitor all the activity, as a part of our customer base. So we are able to meet all expectation regulatory from the U.S. Patriot Act and Bank Secrecy Act and OFAC requirement based on that orchestration layer that we built within the bank.
Hmm. So, I mean, so it sounds like what
Mhm.
really gave you guys scale beyond what might have just been embedded in the different software packages was this
Mhm.
home-built orchestration layer. So
Correct. Mhm.
our teams, our audiences are always very interested in what the results were. So could
Mhm.
you talk a little bit about what results show how this embedded approach really worked?
Yes. So we started growing significantly, like 300, 400% per month on not only new consumer and corporate accounts, but also in volume and transactions. So that grew the business, that helped grow the business. But, as the business grew, we saw all the issues that when something grows, like growing pains. We saw spike in alerts, spikes in alerts for sanctions, spikes in alerts for fraud and all that. But we were able to control it because we had the data. And having all this data and the partnerships, you can actually mitigate this risk significantly. And you can lower this inherent risk to a moderate to low risk by, documenting each of these alerts or investigations with the data we have collected. So yeah, that's the result from that. It was, at the beginning it was while we tuned the process also, we have a lot of alerts, a lot of investigations, a lot of, regulatory reporting, but then it stabilized and we were able to weed off the bad actors and continue growing and then target different markets that we were always planning to target at a consumer's level.
Well, I know one of the results you guys had was being able to recover some fraud losses. Uh,
Mhm.
do you want to just talk a little bit about that, how that happened?
Correct. Yeah. So we were able we're doing real-time monitoring from a front perspective. Everything that comes in or outside the bank, we are reviewing it with AI and different, platforms that we have in place. Also, our onboarding process is very stringent. So we have, biometrics report, we screen IP addresses, we follow devices. So all this framework that we have from onboarding to actual transaction helped us, has helped us at stop transactions real time and actually return the funds to the victims. We've been able to stop pig butchering, romance scams, and actual back frauds, which we've recently stopped on that was very big.
Well, I mean,
Mm.
that result is kind of proof in the pudding, right?
Yeah, correct.
So let me just congratulate you again and congratulate the whole Zenus team that made this initiative possible.
Mhm.
Again, for those listening, there is a 15-page case study where we've gone into detail about all the work Gabrielle and the team have done. It's available on the website for Celent subscribers, and we hope you'll use it to go deeper on this project we think is a model for banks that are embedding compliance into the processes that are allowing the businesses they're part of to accelerate growth. Thank you again, Gabrielle. Appreciate your
Thank
time.
you, Ian. Thanks a lot.
Bye.
Appreciate it.